Well, I am delighted to be joined here at Mines and Money 2016 by Ian Williams, who runs the Charteris Gold and Precious Metals Fund, the UK's top performing fund for the past 12 months, as second year to date. And what a performance indeed. The fund is up 117%. Ian, hello.
Hello.
Thank you very much for joining us. How have you been able to deliver this level of growth and outperform so many other funds?
Okay, well, if you look at the top 10 funds this year, 7 out of the top 10 are gold and precious metals funds. So it's been the sector that's been the best performing sector. Our fund just happens to be at the top of the sector for one special reason, which is that 70% of our fund is in silver miners as opposed to gold mines. Most of the other funds are predominantly gold mining companies, and silver's gone up much more than gold's gone up this year, and silver miners have gone up much more than gold mines. So that's where the outperformance has come from. And
why have they gone up so much? Is it just a supply issue?
No, it happens in every bull market. Silver has twice the volatility of gold in an upswing and twice the volatility in a downswing. So we say to investors, look, if you want exposure to precious metals, you should buy silver over gold all day long. If you don't want exposure to precious metals, you don't buy either silver or gold. There's no real argument for buying gold instead of silver if you're bullish about precious metals. The silver will always go up at least twice as much as gold.
Okay, so you're still seeing upside potential for silver in 2017?
Oh yeah, we think that if you look at the big long-term cycles, like we did, take gold for example, we had a 10-year upswing from 2001 up to 2011. We've now had 5 years of downswing, so we had a 50% retracement in terms of time. We've also exactly had a 50% retracement in terms of price. So the time and price have come together. We think that marks the bottom of the down leg for the last 5 years. We now think the primary trend, which has always been up anyway, which started in 2000, the primary trend will now resume, and we're now going to see another big up leg like we saw between 2001 and 2011.
So in terms of the fund, who is it aimed at? Retail investors, institutionals,
both,
everyone?
Yeah. I mean, it's got retail investors and institutional investors in the fund. It's aimed at anyone really who wants exposure to precious metals, but particularly aimed at ones who want silver exposure, because there's no real other fund in the country that gives such a high exposure to silver. So if you want that extra bit of performance that you get from silver over gold, this is why investors have tended to veer towards this fund.
And tell us about the silver companies you have in your portfolio then. Which are your favourite picks?
Okay, well they're all Canadian. There's 80% of the fund is in Canadian domiciled companies quoted on the Toronto Stock Exchange. Most of them mine silver in Mexico. So for example, Fortuna Silver, which is a Canadian company, Mag Silver, Canadian company, Tahoe. So there's a list of First Majestic. We've got loads of top quality medium and large silver mining companies, nearly all Canadian, nearly all mining in Mexico or Central America.
And what about gold producers?
Now, we've got some of those as well. I mean, again, Canadian, we tend to go with the Canadian. Agnico Eagle is one of our favourite gold picks. We like Alamos, which is another Canadian gold producer. So again, we've sort of been drawn to the Canadian companies. 80% of the fund is in Canadian quoted mining companies, and the next highest is UK mining companies, which is only accounts for about 15% of the fund. So it just shows you the sort of weighting we put into Canadian mining stocks.
And post-Brexit,
yes,
and the US elections, what key themes are currently unfolding?
Okay, the major theme, and it seems to be every single investor seems transfixed by this at the moment. We just done a big roadshow, talked to a lot of institutional investors up in Scotland, and every single one is on this same theme. The deflation-inflation cycle is turning. This is going to be the big theme for 2017. The problem is that 70% of the average pension fund is in bonds and fixed interest, which are deflation-proof assets, and about 1% is in gold and silver assets, which are inflation-proof, and probably only maybe 5-8% in property. So, there's a big mismatch about as the cycle turns. If as the cycle turns, you know, as everyone expects, there's too much weighting in, too much money, far too much money in deflation-proof assets, and nothing like enough in the inflation-proof assets, which is and what we expect to see is some of that money start to move across out of deflation assets. $1 trillion got wiped off the value of global government bonds in the week after Trump got elected. That's just the start. We think there's a lot more to come there.
So the big theme for 2017,
yes.
Reflation.
Deflation is coming to an end, and reflation will take over. And as a result, investors are going to have to position away from the deflation assets that have done so well in the last few years. You know, gilts and treasury bonds and all this sort of stuff, index-linked gilts, they've all done well, but they're all going into reverse, I'm afraid.
Okay, Ian, thank you very much.
All right, thank you.